Hi there, eToro. I didn't have a Friday update last week. Apologies, Friday is a crazy day for me. So from now on, my Friday updates will be on a Monday instead. All right, let's take a look at what moved the markets last week. Okay, looking back over the last 12 months, we were just about pulling out of the bottom of the massive, well, bear market. I'm not sure it was a bear market, but let's call it a bear market of last year. So you can see since then, my returns are roughly 52%. The NASDAQ is sitting around 41%, and the S&P 500 is around 39–40% for that same period. Just taking a look at a few of the, what I call themes in terms of their performance through this year. So the candles represent the S&P 500. You can see that as of the, let's say, last couple of weeks, S&P 500 has been in the choppy part of a pullback. We can also see that through this year, SMH, this is a semiconductor ETF, has had a lot of volatility, ups and downs, and it's kind of where the S&P 500 is for the year. The UK 100, I don't really invest in UK 100 companies. I invest in more of the FTSE 250 kind of stocks, but this is all we have on eToro. So you can see this is kind of flattish for the year. And then looking at the CQQQ, Chinese tech has risen massively in excess of 30% from January kind of time frame, and dropped off massively, and has, I think, found a bottom, but we'll see. And the ETF and sector that it represents, TAN, that's taken the biggest beating through this year, has been those solar stocks. So it's quite interesting to see that through last year, if you had bought just about anything, the chart would have been up and to the right, almost any kind of asset, and you would have made money. Through this year, the market has been a bit more complicated because of what happened last year. And now as the world opens up, the investing landscape is a bit trickier, depending on your time frames. So this is a very small snapshot in an investor's lifetime. So the thing that I wanted to look at here too is we're looking back towards the beginning of the year to see how these things have done. But if we zoom in a little bit, something interesting has been happening in the past few weeks. So I'll take this back to, let's say, beginning of May timeframe. So we can see that a number of these sectors took a big tumble in this month, during this month, so in May. So they've been declining from some of them from February, but really the selling accelerated through May. But we can see that there's also been quite a bigger rebound recently. So if we look back just to the past, let's say, week, we can see that the TAN, which is the solar ETF, has really been flying in the past week. And things like semiconductors and Chinese tech have also picked up. So I think, I don't have the NASDAQ on here either, but I think that a lot of the non-tech stocks in the US market, and also China, they've been selling off for various reasons, but the sell-off has been sustained for a number of months. And that means that those areas that were quite high and their stock prices were looking a little unhealthy have gone through a very healthy consolidation. I think the rotation to value, which has happened over a number of months, as it usually does, feels like it's starting to slow down. So it does feel like the market is starting to change its mind about where to put money in various sectors. If you looked at returns for some sectors that have done very well through this year, so for example, US financials, big US banks, they are the best performers through this year. But they are now starting to look quite unhealthy. I think that US banks in particular have been bought in anticipation of, in June kind of or maybe July kind of time frame of this year, a lot of those companies are going to start talking about buybacks. They already have spoken a little bit about them historically, but I think that the market has been buying the expectation of massive buybacks by US banks, as well as potential increases in dividends. And my feeling is it's going to be a buy the rumor, sell the news kind of event when those things do happen. So once again, these sectors have taken a beating, other sectors have done well, and as a consequence, I think that the performance of those are going to flip a little bit over the next few months. But we'll see. All right, as we almost all know by now, cryptos have had quite a ride in the past week or so. So I've got a few of them listed here, by no means an endorsement, just want to show their performance. So going back to April, we can see that some of them were doing fantastically well. So good old Doge, making more than 100% from April to May kind of time frame. And then cryptos, or Bitcoin in particular, became a little choppy. It was flattening out, sold off a little bit, and then was hanging around a certain level, and then some catalysts appeared in the market and drove the price of Bitcoin lower and lower and lower. And consequently, the alts have sold off too. Some of them have handled better than others. Bitcoin seems to have done fairly well, which it usually does in these massive sell-offs. It's the big daddy, and people run to the safety of the most established crypto. What's kind of surprised me is ADA has held up fantastically well. Anyway, so the selling seems to have slowed down, although, you know, nobody knows the actual direction it's going to take from here. It looks as though cryptos are trying to put in the bottom. Bitcoin's trying to put in the bottom. We'll see if it's put in the actual bottom before we experience some kind of a choppy phase. So any kind of recovery after a big sell-off, investors are nervous. Lots of people have been thrown out of the market, and they'll stay out of the market for a while at least. So volumes are going to be reduced. The people that are left in the market, they're wondering, is it going down? Is it going up? There are some people that are holders. They're just going to hold forever, but there's still a portion of the market that are very nervous. And a big leg down might see more of them leave, which then would reinforce the leg down. So once again, this is crypto. It's very volatile. It's very risky. Manage your investment proportionately. And just know that you might see some big gains, but you also might see some big losses. So I continue to keep it a very small part of my portfolio. All right, another news, commodities, which have seen some fantastic gains themselves through the past year. Lumber, nearly 300%. They had a bit of a weird week last week, so there was a sell-off in some parts of the market. For different reasons. Crude oil sold off a little bit because it looks as though Iran is about to be reintroduced to the global market, and they have a good amount of oil that they would add to the global supply, which drove sentiment downwards. Others like copper. So China's taken some very strong steps to stop their local companies hoarding or speculating on the prices of certain commodities that are fundamental to industry. And so the price has dropped off a little bit because China is basically saying, you will not speculate on the price of copper and you will not hoard too much, otherwise there will be trouble. And they're a big part of the market for materials and commodities, so the prices seem to have paused. The expectation is that prices for copper in particular will continue to rise because China isn't the only player, and some of the other bigger economies in the world are properly opening up now. Demand for copper, by the way, is, I know a lot of people talking about it being driven by the world decarbonizing, and that is part of the picture, but also there's a step before that. So in order to reduce our reliance on fossil fuels, the world needs to electrify, which means we need to get electricity to all the parts of the world that currently rely on things, other types of fuel, to cook their food and light their homes, etc. And obviously to electrify the world, you need a hell of a lot of copper. So electric vehicles, clean energy are part of the picture, but actually just getting electricity to the whole world requires a lot of copper in the first place. A lot of the world doesn't yet have electricity. Okay. In terms of the UK, so the UK, where I live, it's opening up. People are getting quite happy, except for the weather is shit for some reason. Even though it's nearly summer, it continues to basically be winter. But the UK is opening up. People can go out. They can go to restaurants. They can travel around. They can be tourists again in certain countries. But there was a lot of nervousness last week because of the Indian variant of coronavirus. So it seems to be a variant that is highly transmissible. So that created a lot of nervousness in our country and economy and stocks. And so the stocks traded quite strangely last week. But now it seems that our vaccines are effective against that variant, and a very large portion of our population is now vaccinated, at least one dose. Just about all adults that I know in the UK have had one dose of the vaccine. So that's good. I don't have an article about it, but also the EU is now properly opening up, and this can be seen in various measures of the economy. Demands for products are increasing, but demands for services are a better measure of the degree of opening up, because people go out and they want to use various services that they couldn't use in lockdown. People could still buy things, some things, in lockdown, but services were another story. So EU, it's looking quite good. The EU is properly opening up now, which is great for them and great for us in the UK. Another big news item last week was there was a Fed meeting, a US Fed meeting, and the US Fed said that they wanted to start talking about tapering in future meetings. So tapering asset purchases means effectively slowing down quantitative easing within the US. So there are two major tools that have been used to help support the US economy, the growth of the US economy, and many other countries. And those two tools are quantitative easing and interest rates. So tapering asset purchases means slowing the rate at which they are buying assets, usually largely bonds. And so they're not saying that this is going to happen yet. They're saying that they're going to talk about it in a future meeting. So they're trying to introduce this to the market and not scare the market. They're trying to prevent what's called a taper tantrum, the market freaking out about tapering and dropping off massively. The market didn't react too much to this news when it was announced, and I suspect that's because the market is already overpriced in these events happening. So we'll see when it happens. I think when the Fed actually announces we are tapering asset purchases, we might see a very short-term move, probably down for the market, but I think it won't have a long-term effect. I think these kinds of things they're overpriced into the market. The market's been overly cautious at the moment because it doesn't have solid news to act on. In addition to that, out of the US, so Biden is trying to get an infrastructure plan through the US government. As with anything like this negotiation between the political parties about the size and what the money spent on, etc. So it's emerged that they revised the number down from 2.3 trillion to 1.7 trillion. The market also didn't seem to respond too much to this, and today it looks as though most US indexes are going to open up, although who knows where that means they're going to close. But by and large, it seems that the market doesn't mind that this has been revised down. So this spending will be all around the US economy. It'll create jobs, it'll drive GDP, it'll refresh parts of their infrastructure and help them replace some of their reliance on fossil fuels with clean energy, which is cool. Something else that's come out of the US, and I focus on the US because it drives a lot of the other markets. So you will have heard about the US Biden's plan to implement an increase on corporation tax in the US to quite a high number, but over a long period. I think it was a decade or so. There's been some big pushback. When this was initially announced, the market did react quite strongly, but this is not something that he's just able to do. He needs to go through various channels. There'll be negotiations, and it's expected that this will be watered down, or that number reduced to some degree. So there might still be an increase in the corporation's tax rate for the US, but it'll probably be smaller, or maybe over a longer period. We'll see, maybe both. The other interesting thing that's happened is the US said that they wanted to implement a global minimum threshold for corporation tax. This is very interesting, not just for how it affects the markets, but how it affects the global economy and behaviors within the global economy. So in the world, there are a number of safe havens, places that companies can incorporate where they pay no or very low tax. And this drives some dodgy behavior, and it means that some very large companies pay a lot less tax than people think they should be. There was some pushback on the rate. The US proposed this to other countries. The other countries have considered it more than I thought they would. They said the number was too high. And now the US is reviewing this threshold amount and asking countries who might be willing to participate once again. So whichever way it goes, it'll be a very interesting development to watch. Other big news through last week. So many countries in Asia had initially done very well with regards to coronavirus. But strangely now, many of them are suffering some very sudden and large outbreaks. So quite a few countries, as you can see. Taiwan is one that's been making headlines. It did very well initially with regards to coronavirus, but is now having to deal with an outbreak. I think part of why Taiwan in particular is making headlines is because it is one of the biggest makers. Well, it houses companies that some of the biggest chip makers, semiconductor companies in the world. And it's already been crunch time for semiconductors. So it's not known how this is going to affect the rest of the world, but we will see. The outbreaks, I think in most cases, are the measures to contain the outbreaks have been quite extreme, and the outbreaks themselves haven't been enormous, not like the scale that we've seen in India. So fingers crossed that they're able to contain it well, because this has been going on for too long now. Some good news. So India has obviously been in a hell of a lot of trouble with regards to coronavirus for a long, long time now. But it seems that they've got their cases under control. Unfortunately, the death toll is still enormous. But the trends with regards to deaths does lag active cases to some degree. So it's expected that this number will be trending down quite soon. Which is fantastic. At last some good news for India. Something that I wanted to do quite quickly is talk about how important the long-term view is for us. And I'm doing this by looking backwards. All right, so we're going to look at an article and some price action from 2012. I'm not sure how many of you were investing in 2012, but there were a lot of concerns around Apple and their ability to continue to grow and be a fantastic company. The media is a key source of information, but you need to be very careful about the opinions that the media is pushing. They're incentivized in a very particular way. So they need to get lots of articles out in a short amount of time. And they know that dramatic headlines pull viewers in. So they're trying to make money out of people clicking on links and going to view articles. So they quite often create narratives that are very negative, because negativity tends to sell more than positivity. When's the last time you saw a whole bunch of very positive headlines out of the media? So this is an example of such an article. So, oh no, Apple stock price has been crashing. There's no bottom in sight. It's the end of Apple. run for the hills, sell all your Apple stock, get out of there. But if you had been an investor in Apple stock at the time, you will have known that they were rock solid, huge amount of cash, great earnings, great forecasts. So you would have been confused because the media would have been pushing a narrative that was, depending on your analysis, quite different from the outcomes that you expected. And if we look at the charts, we can see that within that time frame, so Apple's at a high here in August 2012, the stock price lost 46% through to, which candle did I measure here? Through to June 2013. So these are month-long candles, right? So if you'd bought Apple, you would have had to sit on a lot of losses, paper losses, over a number of months in order to wait out the sentiment in the market at that point in time. I know that a lot of people would have sold because having a long-term, being patient when the market's going up is easy. Being patient when the markets are going down, even when you fundamentally believe in the business and everything is telling you that business is a fantastic business, is very, very difficult. It's difficult to be patient. But if you had held through that over the subsequent 2 years, you would have made a return of 141% from those lows. And if you'd held through to, I've taken this top in September 2020, which is kind of the top now. But if you'd held through this whole period and you'd bought the top back then, you still would have made a gain of 428%, which is fantastic over an 8-year period. So theoretically, having a long-term mindset is much easier than actually having a long-term mindset, finding good companies at good prices and buying and holding them for years. Is not easy, but that is how you make a shitload of money. So there are numerous examples of this through the years. The information is there for us to see, but overcoming our own psychology is one of the most difficult parts of investing. Something that's quite interesting is that if you had bought Apple around then, you would have been able to buy it in single-digit PEs. Something that I don't think we can hope for in Apple for a long time to come. But this is how absurd the market was over that period. Investors were looking at Apple, a company with killer products, great fundamentals, a great leader, and we're willing to let it drop all the way into these single-digit Ps. That makes sense. And there are lots of stocks that are like this today. They just don't make sense. The price action on the stock doesn't make sense at all. But it does take a lot of patience in order to see out these massive gains. Okay, so that is it for last week. What about this week? Earnings season is nearly done, but not quite. So we can see that there are a few companies. Some of these are wrong, by the way, but we can see a few companies that are still going to report. So NVIDIA, to me, is one of my most expensive semiconductor companies. And on the announcement last week that there was going to be a stock split, the stock did jump. I considered selling on that news because I do feel like even with the recent pullback, that NVIDIA is one of my most expensive. We'll also see Salesforce reporting, and then it's more or less done and dusted. But when one earnings season ends, another one begins. And so Micron usually starts earnings season within my portfolio, and on the 30th of next month, we'll see Micron report. This is one of my favorite companies at the moment. I'll be very interested to see what they have to say. I think that the usual things are going to continue to dominate headlines through this week. So we'll see more talk about commodities because they have at least a conceptual and some actual impact on inflation. Chip shortages, I think, will also be something that we will hear a little bit more about, although that news is fading into the background. And of course, the old inflation. If you do want to guard against US inflation, even though I think initial inflation rates in the US are going to be fine for the next few years, consider diversifying your portfolio across geographies. Not everyone has printed as much money as quickly as the US has, so inflation will be less of a concern in other places. All right, that's it for this week. I will see you next Monday. Goodbye.